Good morning, everybody. Welcome to the Premarket Prep session. It's good to be back. We're here on August 8th, 2023 to go over the important news, notes, information, analysis that are all necessary, right? Some might say pivotal to your success in markets this week. I'm your host, Adam Holland, stock options expert market strategist. Was out yesterday, but we are back here today, freshly desutured, leg healing up pretty nicely, and looking to continue moving forward, trading markets here. Going to get everything squared away, and then we're going to dive in. So let's see. I think I'm actually going to start with the week ahead, just to be safe, cover what we normally would have gone over for the week ahead on Monday, and do that now, and then we'll also go into our Tuesday specific news. So make sure whether you're watching live or via replay that you're throwing that one in the chat, signifying your intention to get 1% better. Super important to do that. Set your intentions and come ready to rock and roll. And then let's dive in. We're going to start with the week ahead and then go into our Tuesday specific news. So top news this week, the pace of earnings slows down in the week ahead, although powerhouse reports and potentially sector rattling updates are due from Skyworks Solutions, United Parcel Service, who's UPS, Disney, DIS, and Alibaba, whose ticker is BABA. So far, just under 80% of the S&P 500 firms have beaten Q2 consensus EPS estimates, while only 59% of firms have beaten revenue expectations. That current percentage of revenue beats is the lowest in 3 years. The economic calendar features fresh updates on inflation, with the July Consumer Price Index report due out on August 10th, and the Producer Price Index report set to be released on August 11th. So it looks like on Thursday and Friday we get CPI data and PPI data. That's going to be really important, right? Those are, things that can move markets when we talk about inflation and inflation data, right? Throw an 8 in the chat for the big 8. We haven't mentioned the big 7 or the big 8 as religiously as we used to, but they're still undergirding the fundamental movements of this market. So throw an 8 in the chat there for the big 8. The bond market could also be in the spotlight next week with the auctions of 3 and 10-year notes and 30-year bonds going off at higher amounts than originally forecast, and yields generally on the rise. Wayfair and Kellogg hold key investor events, while DEF CON Hacker Convention will give AI systems a serious test on vulnerabilities. So in terms of earnings, yesterday we had Tyson Foods, Lucid Group, Paramount Global, and we had Palantir also. Palantir, which I was very interested in. They retraced a nice weekly breakout yesterday. Held that weekly breakout, went to bounce. Looks like they're opening at around break even, but all those longs should still be A-okay. Lotto is always going to be a toss-up because those can get IV crushed if you don't get good movement. But depending on, if we rip from here, considering all the earnings info is good info, those might still be able to come back as well. But overall, still love it long because that weekly setup is super juicy. And, the calls that we hopped in yesterday were nice and green there, headed into close. And they beat on earnings, and they also announced share buyback. So I'm excited for their long-term prospects there as they continue to rake in, especially, government and defense contracts and lead things on the AI front. So I like them on the weekly. As I said previously, repeating that again here. Like them, long-term when we talk about calls a few months out. Earnings spotlight on Tuesday. Today we have Eli Lilly, which again is like pretty much the Michael Jordan of pharmaceutical stocks at this point. United Parcel Service, UPS, Lee Auto, I think it's pronounced, whose ticker is LI, and then Datadog, whose ticker is DDOG, who we've traded recently for some very nice profits. Earnings spotlight on Wednesday, we've got Disney, Trade Desk, TTD, Roblox, RBLX, Wynn Resorts, WYNN. And then Thursday, we've got Alibaba, whose ticker is BABA, US Foods, and then Ralph Lauren. Let's see. We got any other important events here? Let's see. Later in the week, the DEF CON Hacker Convention has more potential stock market implications than in the past. 5 teams of hackers will be in a sanctioned competition to successfully remotely infiltrate and hijack a U.S. government satellite while it's in space. In addition, companies such as OpenAI, Microsoft, Google, Nvidia, and startups Anthropic, Hugging Face, and Stability AI have all agreed to provide their AI models for a hacking test. DEF CON 2023 is being called the first instance of a live hacking event of a generative AI system at scale. So that should be very interesting, right? We could see which, if any, of these large language models and these, AI systems are vulnerable to hacking. They mentioned, let me see here, Anthropic, which is a big AI startup, kind of a competitor to Microsoft and OpenAI and ChatGPT. And Anthropic just dropped a new iteration of their AI, which is very impressive. The AI wars are fully in tow here, and we are at full speed ahead on the AI wars. Pretty crazy. So make sure you just are abreast of what's going on, because there's other AIs other than just ChatGPT. I know ChatGPT is the most famous one, but they've got a lot of things happening, right? A lot of things going down in the AI space, the AI sphere. Now let's dive into our Tuesday specific news. That top news being trouble in China. So 2023 was the year that China's economy was supposed to come back roaring, or come roaring back following the end of its zero COVID policy. But all of the indicators are pointing in the opposite direction. Data has shown slowing growth and soaring youth unemployment. And there are many signs that deflation might be a bigger problem than previously imagined. The latest data today showed that Chinese exports suffered their worst fall since the start of the pandemic, while its CPI came in flat in June and producer prices have gone into a tailspin. Now, what's happening? China ended its zero COVID policy when rising global inflation had already dented demand for its exports. And compared to the industrialized countries, there wasn't as much excess savings to spend after the reopening. The PBOC, People's Bank of China, has even cut interest rates to encourage consumption, but further stimulus may be challenging given China's big debt problem and the weakness of the yuan. Bubbles in the property market have also led many to reassess their net worth, while an escalating trade war has seen manufacturing from Western multinationals outsourced to other countries like India and Vietnam. Meanwhile, crackdowns in recent years have left the private sector reeling. The suspension of Ant Group's IPO and the DD Global fiasco soured investment, while Beijing has led targeted campaigns against industries like media, education, and even food delivery, sapping the confidence of the business community. The Chinese government is trying to repair some of the damage by courting big U.S. industry players like JP Morgan's Jamie Dimon and Tesla's Elon Musk. But the restrictions on economic activity have prompted many Chinese citizens and companies to save their cash rather than spend or invest. Now, what to watch? Deflation could beget deflation expectations, which may see demand suffer as consumers hold off on more purchases. Businesses could also make less revenue if they cut prices, meaning fewer jobs and reduced wages and eventually lower consumption. So you're just caught in this kind of dragon eating its tail cycle where, people don't have money to spend, people don't spend money, businesses make less, they lay off workers don't have jobs, they don't have money to spend, there's less demand, right? Where it's just a tailspin. Quote, problematic China statistics extend from macro statistics like GDP and unemployment to earnings. Notes Seeking Alpha analyst Logan Kane, in China's economic slowdown, a wake-up call for the U.S. economy. Quote, here's what we do know. Investment in China has fallen sharply. There is a huge debt load and China's population is now falling. Now, in terms of financials, Credit Watch, Moody's cut credit ratings on multiple small and mid-sized banks and placed 6 larger lenders on review for downgrade to reflect U.S. banking stresses. Quote, many banks' Q2 results showed growing profitability pressures that will reduce their ability to generate internal capital, Moody's warned. Given that its base case for a mild recession, their base case is for a mild recession in early 2024. It also raised concerns over small and mid-sized banks with greater exposure to commercial real estate, especially in construction and office lending. Among the downgraded banks were M&T Bank, ticker MTB, and Pinnacle Financial, ticker PNFP. While the lenders on watch for a downgrade include U.S. Bank Corp, whose ticker is USB, and Truist Financial, whose ticker is TFC. So, maybe we haven't seen the end of the banking stress, right? We saw, I don't remember the exact number of weeks ago, but we saw a number of weeks ago about how, there were a lot of big banks that were kind of offloading their kind of commercial real estate portfolios and selling them and getting rid of them. So that, could be exactly what we see happening here, just, kind of culminating, right? Because we have the investors that are selling their, commercial portfolios. And then as a result, right, all these other kind of sectors that surround it, when we talk about, lenders, when we talk about, construction, lending, office lending, right, all that, it affects a number of different sectors when commercial real estate slows down. So, a lot of banks that do commercial real estate loans, it looks like Moody's is cutting their credit ratings on these banks. So, another kind of bearish sign in the commercial real estate space, which has kind of suffered in a lot of areas. We talked about Airbnb in Arizona, right? About how like they turned a bunch of areas into Airbnbs and nobody's renting them out. There's a lot of issues with like flips in Arizona as well as other areas of the U.S. where people thought they could buy properties and flip it, and they can't, and now they're sitting on the properties. So commercial real estate taking a hit here, at least in certain sectors. And you've got Moody's downgrading some small to mid-sized banks on the back of that. Now, staying in kind of the finance sector, PayPal USD. So we got some crypto news. Even as the cryptocurrency industry faces regulatory heat, PayPal is pushing further into the space with this launch of a dollar-denominated stablecoin on the Ethereum blockchain. PayPal USD is backed by US dollar deposits, short-term treasuries, and similar cash equivalents, and is redeemable one for US dollars. In terms of direct rivals, it would go against Tether and Circle's USD coin, the largest and most popular stablecoins. Seeking Alpha analyst Mike Fay is not convinced of how the stablecoin will benefit PayPal financially, saying for now it looks like PYUSD adoption will be better for Ethereum than for PayPal. And that was my thought, seeing the news as well. Like, this doesn't really seem like it would benefit PayPal that much. More so, it would benefit Ethereum. We do have, a number of kind of big money players that, kind of took bullish stances on PayPal in reaction to this. One is a company that's looking to expand its crypto operations like into Dubai. So PayPal, something that's gotten beaten down, right? A fintech ticker that's really got the backyard beat down, right? The behind the dumpster beat down. And it's really tough when you have Apple coming in and, kind of disrupting your core business. PayPal gapped down big on earnings, right? And is right kind of back near the lows in the 60s. So they just had earnings recently. They might have beaten, I don't know, but the reaction was definitely negative. But yeah, looking here today, PayPal, I think the news came out yesterday before close. So I don't really see it, having affected PayPal's stock. But if we do get a close over 64.75, I like PayPal for calls, on the short term, right? So maybe intraday to swing play over 64.75 on PayPal for calls. I would fire a nice hourly bull flag on PayPal. But that's only if, we hold and we put in a higher low here. And then we, kind of go on to break that previous high, establishing an uptrend. That's what we need. So 64.75, an important level to watch on PayPal just to see if it gets any moves here, any bullish sentiment on the back of that news this morning. So I'll set a little alert. Testing, hourly bull flag, breakout. Nice. Okay. So, consumer news, Tesla departure. In a surprise shakeup, Tesla's CFO, Zachary Kirkhorn, has stepped down after 13 years with the electric vehicle maker. Vaibhav Taneja was named CFO in addition to his current role as chief accounting officer, but the move will trigger new questions about the succession in the top ranks at Tesla. While the stock is up 130% year to date, shrinking margins are a concern amid increasing EV competition, and the company just reported its lowest China EV sales this year. In other news, Neuralink, the brain chip company co-founded by Tesla CEO Elon Musk, has raised $280 million in funding. Sheesh. So in terms of today's markets, we're looking majority red here. In Asia, Japan, we're up 0.3%. Hong Kong, we're down 1.8%. China down 0.3%. India down 0.2%. London, we're down 0.7%. Paris down 1%. Frankfurt down 1.3%. The Dow down 0.6%. S&P down 0.6%. NASDAQ down 0.5%. Crude oil down 1.5%. Gold down 0.2%. Bitcoin up 0.8%. Still sitting around 29K. And then today's economic calendar. We get wholesale inventories at 10 a.m. That's probably the only thing, right? When we talk about just after close and, there's data that can short-term affect how we move. That's, one of those pieces of data. So we'll watch out for that at 10 a.m. What else is happening? WSB survey still open with most desiring some kind of home office. I guess, they released some survey asking about working from home as opposed to going into the office. Then Amazon to meet FTC next week ahead of antitrust lawsuit. Palantir rises as Q2 results meet estimates, fiscal year forecast raised. So that was, afterward, it was like immediately after the news, it looks like Palantir dipped and then, came back up and was green. And now it looks like we'll be, fighting for green at opening at roughly the same spot that we closed at yesterday. But definitely something that I keep on the radar given the retracement of, I feel like I've got a hair dangling somewhere on me, the retracement of weekly breakout. And also those positive earnings. So that's definitely on the watch here for day trade. As there are times when PLTR has gotten earnings, but it will go up during the session. There are certain stocks, Starbucks was one of them in the recent earnings season where, it opens up flat or it opens up down and then it just runs during the whole session. So make sure you've got, relevant pre-market levels marked off and got that kind of looking down the barrel here as we go into this morning. Tilray to buy 8 craft beer brands from AB InBev, likely to make cannabis-infused beer. Lucid Group, ticker LCID, on track to produce over 10,000 vehicles this year. Let's see how Lucid did, because they had some new partnerships. Looks like Lucid, kind of the same thing, right? Immediately they popped down, then they popped up. Now they're looking to open flat. And then what else we got going on? Streaming helps Paramount, ticker Para, and then Simon & Schuster sells for $1.6 billion. Electric bus maker Proterra, ticker PTRA, tanks on bankruptcy filing. That's not fun. Who knows? Maybe they'll find second life as a meme stock. That seems to be the life cycle of companies now after they go bankrupt. Realty Income, ticker O, files to sell up to 120 million of its shares. Dish Network, ticker Dish, and then EchoStar, ticker SATS, nearing deal to merge. Tyson Foods forecasts weak margins for beef and chicken. Beyond Meat warns it may not be cash flow positive in 2023. Shocker. But that is everything that we got going on here for August 8th, 2023. I'm excited to get back into things this morning, right? Diving into what we got going on here. The market was, it looks like we moved higher, on a net basis last week, but yesterday. But yeah, definitely bearish sentiment coming into the week. This week, Apple paid huge, right? Hugely on the swings after that rising wedge from last week. Apple's got daily support. It looks like a 177.35. So again, make sure that you're taking profit on those. Go out on your daily chart. Make sure for levels and say, okay, if I've passed all my price targets, where should I look to take profit? Go out and investigate that, right? You want to always take part in your own rescue. So if you're asking questions, investigate the answers to those questions. And oftentimes they're a lot easier than you think. But yeah, Apple hit that 177.35 yesterday. And that was where we bounced. So I would not be surprised to see some type of relief bounce in Apple. But obviously, if we lose that area on the hourly, we can continue to head down. But overall, that was really the play of the week last week headed into this week. And those put swings did very well for us. So continue to tune in to this session, right? Take the analysis to heart, execute on it, and it will pay, right? And just make sure that you rinse and repeat. Stay consistent. Consistency is, what gets the deal done. Sharon said, is it just me or is he breaking up? I don't think so, but it also might have been just because of the me moving around on the platform. There's too much happening at once. Sometimes the stream can go haywire. But that'll wrap us up. Put a bow on it and take us out. Tuesday, August 8th, 2023, people. Excited to get back into it. Everybody, make sure you show love to this account. Show love to the Instagram Reels. And let's make it another great day. I'll see you back here tomorrow morning for our next Premarket Prep session. Peace.